All right, welcome back. Thanks again for watching. So in this video, it's geared toward those that own a single member LLC or a sole proprietorship. So you don't file a separate business tax return, you just report all your income and expenses on Schedule C. So if you're one of those people, I'm going to show you a tax strategy, but it only applies if you're married and your spouse is not part of the business. So if you haven't done so, please subscribe below. And if you have any comments after watching the video, also please leave them in the comments below. Thank you. All right, so I'm going to walk through an example here of when you own a business, whether you're a sole proprietor or you're a single member LLC, and it's just yourself. The idea here is, well, if you're married, maybe bring on your spouse and you can avoid, or you can kind of reduce the self-employment tax. So let's look at this example. We got Ferris here. He owns a consulting business. It's just him. Okay. And it's called, let's see here, Bueller Consulting. Okay. He's a single member LLC. And for those of you watching this video, if you're a single member LLC or a sole proprietor, you know all that gets reported on Schedule C in your 1040 of your personal tax return. All right, so he did about $106,000 of revenue. He had some expenses, and his net income of the year is $100,000. So net income is what drives the tax liability. Okay, so Ferris has to pay ordinary income tax on this amount. And in addition, there's a self-employment tax because he's the owner of this business, and that's what self-owners have to do. So the self-employment tax here for him is going to be $14,000. So if you go to Schedule SC, the self-employment tax, you can see how that's all calculated. And he's got to pay $14,129. That's self-employment tax. Now, half of it is deductible, but he's still got to pay this tax here. So if we go back to his tax return here, okay. So on page 2, right? So page 1, here's that $100,000. Then we go to page 2, and you can see the tax on, his income of, after deductions and everything is $5,000. But look at this, other taxes, self-employment tax, $14,000. So you got to add that back in. So he's got to pay tax on this. So that's how the current situation is, right? You're a sole owner, single member LLC, sole proprietor. That's what's going on. The tax strategy here is if you got a spouse, is to give them a percentage of the business, right? So you're active in the business, right? You're Ferris, you're active in the business, and you own 50% of the business. What if Ferris would give his wife Sloan the other 50%? Now, she is not active in the business. She's a passive, participant in the business, or you can call her like a passive investor. So she's not active in the business, and limited partners or limited business owners don't pay self-employment tax. Now, if it's going to be the two of them, what's going to happen is they're going to have to file a partnership tax return. Okay. And I got an example here of what that looks like. So I'm going to tell you what the tax savings is going to be. And you got to think about, okay, here are the tax savings in this scenario. I would say a partnership tax return could cost you anywhere between, $2,000 to, a couple $1,000s a year, depending on how complicated it is. So you got to factor that cost into it. There might be some administrative, but you and your wife still are not on payroll. And as you've seen in, prior examples here, Ferris cannot get a W-2 from his consulting business. When he wants to get paid, he just takes money out of his, consulting business bank account. So there's no W-2 in here from Ferris. So let's move to the partnership tax return, right? So here's a partnership tax return. And for those of you, where this is kind of new, the tax return number is a 1065. Okay. So this is when there's 2 or more people inside the business. It's an LLC, right? So this is taxed as an LLC. And you can see here the net income of the business is $100,000. Now you got to keep in mind, I don't want to get too complicated here or too in depth. And if you have questions, leave them in the comments below. But partnerships, when you file them with the IRS, it's more of informational purposes, okay? So by filing this return, this partnership is not writing a check to the IRS. Instead, what happens is, in this case, there's 2 owners, right? Ferris and Sloan. So Ferris, he is 50% owner in the business. So 50% of that $100,000. So let's go back to page 1, net income of $100,000. So how this gets paid, how the tax on this gets paid is through the owners. So this is called a flow-through entity, right? Your LLC, 1065, multi-member LLC, okay? So, and how it gets reported is on the K1s. Okay, so here's a K1 for Ferris. And on his K1, it's showing ordinary business income, right? 50,000 or 50% of that 100,000. And what Ferris is going to do is he's going to take this K1 and report it on his personal tax return. Okay. Now look at this, self-employment earnings, right? So he's active. He's a non-passive, investor, in this partnership. So that 50,000 is also subject to self-employment tax, right? Which we saw earlier. So that's Ferris, right? So now let's go to Sloan and what her K1 looks like, right? Remember, she is passive, okay? Now she's 50% owner, so she's got to report this $50,000 on her personal tax return. Now remember, Ferris and Sloan are both married, okay? But remember, she's passive, okay? By her being passive, look at this. There's no self-employment earnings, okay? So when she records all this on her personal return, her portion is not subject to self-employment tax, only Ferris, okay? Now, if you add up the ordinary income here, right, 50,000 plus Ferris's 50,000, that's the same as we saw earlier, right here, the net income of the business, right, the 100,000. So here, Ferris is reporting 100,000. This is like option 1. This is scenario 1, where Ferris is the only owner of this Schedule C, and all this is subject to self-employment tax. And this gets flowed through on their personal return, and it shows up here on line 8, other income. Now, let's say that Schedule C didn't exist, and they each get the K1s, right? When you add up the K1s, that's also sums to 100,000, and that's going to show up right here. What's going to be different here is the self-employment tax. So remember, Sloan is not going to be paying the self-employment tax. It's only going to be Ferris, and they're both 50-50. So in this example, this amount right here is only going to be $7,000, right? Half of the $14,000. So by filing that partnership return, making Sloan a passive person in this business, they're saving $7,000 of tax. Okay. Now they're going to have to file a partnership tax return. Like I said, it could be $2,000, $3,000, but still they're saving a couple $1,000s by changing this up. So, we've seen this like with real estate, agents, right? Where, there's, a couple, one of them is a real estate agent, and they report everything on their Schedule C. Well, what if they file a partnership return and have their spouse be part of that, partnership, right? And you kind of break up the self-employment tax, because in this example, this is all around $100,000. Imagine if your income is higher, right? Now, if your income is lower, your savings are going to be a lot less. So you got to weigh the cost and benefits on this. Does it make sense to file a separate business tax return for the savings? Now, in this case, I would think definitely, right? So it might cost them $2,500, $3,000 for the partnership return, maybe less, but they're still saving, at least, $4,000. So this is called, partner in the business. And if one of you has a Schedule C, right, and you're married, you might want to consider kind of looking up, setting up, a partnership. Now, if you do go down the partnership route, right, you do want to get an operating agreement. You're going to have to get a separate business bank account, which you probably already have with your Schedule C. So there's a little bit involved here, but the tax savings could be pretty high and might be worth it. So again, thanks for watching. If you have any questions, leave them in the comments below. And if you haven't subscribed, please do so. Thank you again.